The banks just won. And I know that sounds like a strange thing to say in a video about XRP, because for years the narrative was that the banks were the enemy, that they were fighting to keep XRP down, that the entire establishment was working against this asset and everyone who believed in it. But what is happening right now in February 2026 is something fundamentally different. The banks didn't beat XRP. The banks chose XRP. And understanding the difference between those two things is the most important thing any XRP holder can do right now. Stay with me, because what comes next in this story will genuinely change how you think about this asset. What is up everyone, John OG here. Welcome back to the channel. And if you are new here, welcome for the first time. This is Crypto John OG, where we skip the hype, skip the screaming, and sit down and actually think through what is happening in this space with the seriousness and depth it deserves. If you have been here before, you already know the standard. We do not waste your time, we do not chase clicks with empty predictions, and we do not tell you what you want to hear just because it is easier than telling you the truth. Today is no different. In fact, today might be one of the most grounded and important conversations we have had on this channel in a long time. Before we go any further, I need to give you the disclaimer I give on every video, because transparency is non-negotiable here. Nothing in this video is financial advice. I am not a licensed financial advisor, investment professional, or broker of any kind. Everything you hear in this video is strictly for educational and informational purposes only. Cryptocurrency markets are highly volatile. They move fast, conditions change without warning, and there is always significant risk involved in any investment. You could lose money. Please do your own independent research, consult with a qualified financial professional before making any investment decisions, and never invest more than you are prepared to lose. With that said, let us get into what is really happening right now. To understand why February 2026 is shaping up to be a genuinely pivotal moment in XRP's history, you need to understand the story that led here. Because this is not a story that started last week or last month. This is the culmination of years of legal battles, regulatory uncertainty, institutional hesitation, and patient grinding work by the people building this technology, and it is finally, visibly, undeniably producing results. Cast your mind back to December 2020, when the Securities and Exchange Commission filed its lawsuit against Ripple Labs. At the time, the message that action sent to the market was clear and deliberate. The most powerful financial regulator in the United States was drawing a line, and XRP was on the wrong side of it. The consequences were immediate and severe. Major exchanges delisted XRP within days. Institutional investors who had been watching pulled their interest off the table. Banks that had been quietly piloting Ripple's cross-border payment technology stepped back and waited. The legal cloud that settled over XRP in December 2020 was not just a court case, it was a freeze, a suspension of the asset's ability to fulfill its potential in the market it was actually built for, the institutional financial market. For the holders who stayed through that period, the people who kept doing the research, kept tracking the fundamentals, kept watching the real-world use cases continue to develop in markets outside the United States, those years tested patience in ways that are genuinely difficult to overstate. The price was suppressed, the narrative was dominated by legal uncertainty, and the broader market treated XRP as damaged goods for most of that period. But here is what the people who dismissed XRP got wrong. They mistook a legal cloud for a fundamental failure, they confused regulatory hostility with technological irrelevance, and they underestimated the depth of the institutional relationships that Ripple was building and maintaining even during the years when the US regulatory environment made domestic deployment impossible. The rest of the world did not stop. Japan kept moving, the United Arab Emirates kept moving, Southeast Asia kept moving, the United Kingdom kept moving, and quietly, methodically, Ripple kept building the infrastructure that would matter when the regulatory picture eventually changed. That change is now happening, not gradually, not theoretically, visibly, concretely, right in front of us. Let's talk about what has actually happened in recent weeks, because the specifics matter enormously and each one carries its own weight. The single most significant structural development is the OCC's conditional approval of Ripple's National Trust Bank Charter. The Office of the Comptroller of the Currency, the US federal regulator that supervises national banks and federal savings associations, conditionally approved Ripple's application to establish Ripple National Trust Bank. Ripple was not alone in receiving this approval. Circle, BitGo, Fidelity Digital Assets, and Paxos also received conditional approvals at the same time. But Ripple's inclusion in that group carries specific and enormous significance for XRP holders, because what a National Trust Bank Charter actually means in practical terms is direct access to US banking rails, not indirect access through partnerships, not access mediated through third-party financial institutions, direct access to the infrastructure that moves money through the American banking system. The OCC's decision was not made in a vacuum. Traditional banking groups, the American Bankers Association, the Independent Community Bankers of America, the Bank Policy Institute, pushed back against these approvals with public statements about systemic risk and unresolved regulatory questions. The fact that the OCC granted conditional approval anyway, in the face of that organized institutional opposition, is a statement about how seriously the US regulatory framework is now taking the role of blockchain infrastructure in the future of American finance. This is not a small thing. This is the US government's primary banking regulator telling Ripple, "You belong in the banking system." The practical implications are significant and immediate. Once Ripple completes the capital, risk, and governance requirements for full approval, it moves from being a peripheral payments partner for banks into what analysts are now describing as a banker's bank for blockchain rails. Payment and settlement activity can scale through Ripple's infrastructure without every individual bank needing to build bespoke blockchain systems from scratch. That is the kind of structural positioning that changes the adoption curve fundamentally. Now let's talk about what the banks themselves are doing, because this is where the story gets even more compelling. Société Générale, France's third largest bank, with roughly $1.8 trillion in assets, the sixth largest bank in Europe and the 18th largest globally, launched its Euro stablecoin EUR convertible on the XRP Ledger on February 18, 2026. Let that land for a moment. A systemically important European bank, one that is subject to the full weight of European financial regulation and MiCA compliance requirements, decided that the XRP Ledger was the right infrastructure for its regulated stablecoin deployment. Not Ethereum alone, they were already on Ethereum. Not Solana alone, they had added Solana in June 2025. They specifically evaluated the XRP Ledger against every other option available to them and chose it as their third deployment chain, using Ripple's institutional custody infrastructure to secure their reserves and manage on-chain issuance. The reason SG Forge gave for choosing XRPL is worth quoting directly because it is so precisely aligned with everything that XRP has always been positioned to deliver. They cited the network's 3 to 5 second transaction finality compared to Ethereum's 12 to 13 minute finality window. They cited transaction costs averaging a fraction of a cent compared to Ethereum's variable gas fees that can spike dramatically during congestion. And they cited what they called a secure and decentralized layer 1 blockchain with the speed and cost profile suited for institutional use. This is not a crypto-native company making that assessment. This is one of the most regulated and scrutinized financial institutions in Europe saying publicly and formally that XRP Ledger meets the bar for institutional-grade settlement infrastructure. And SG Forge was not alone in February 2026. Deutsche Bank, one of the most recognized names in global finance, announced plans to integrate Ripple's technology into its cross-border payments and foreign exchange workflows. Aviva Investors, a major European asset manager, announced a partnership with Ripple to tokenize traditional funds on the XRP Ledger, Ripple's first deal with a Europe-based asset manager and Aviva's first move into tokenization. These announcements pushed the XRP Ledger to number 2 in 30-day real-world asset growth with a 15% increase and roughly $1.5 billion in tokenized assets. Only Arbitrum grew faster. The XRP Ledger is now outpacing Solana, Polygon, and Avalanche in the real-world asset tokenization race. There is a nuance in this story that I want to address directly because intellectual honesty requires it and because the most credible voices in this space are already raising it. The relationship between institutional adoption of the XRP Ledger and direct demand for the XRP token itself is not automatic or guaranteed. Banks can deploy on XRPL, use Ripple's software stack, and benefit from the network's speed and cost advantages without ever holding or using XRP as a bridge currency. Deutsche Bank made this explicit in its announcement. It will use Ripple's technology, but will not adopt XRP directly as part of its workflows, at least initially. This is a real tension in the XRP investment thesis, and it deserves honest acknowledgement rather than hand-waving. The infrastructure winning does not automatically mean the token wins in lockstep. What it does mean is that the network is being validated at the highest levels of institutional finance, that real transaction volume is building on-chain, that the credibility and profile of the XRP Ledger among regulated financial institutions is growing measurably and concretely. And the argument that serious long-term XRP holders make, and it is a reasonable argument, is that as the network scales, as transaction volumes build, as more assets are tokenized and settled on XRPL, the economic case for using XRP as a bridge currency in cross-border flows becomes stronger, not weaker. The infrastructure build-out is the precondition for the token demand to follow. You need the rails before you can run the trains. The timeline for that conversion from infrastructure success to token demand is uncertain. Markets have already demonstrated that good fundamental news does not always translate into immediate price appreciation. XRP was trading near $1.40 even as the SG Forge and Deutsche Bank announcements broke in February. But the structural positioning being built right now is real, it is institutional, it is verifiable, and it is the kind of foundation that lasting value is built on, even if the market takes time to recognize it. There is another layer to this story that very few people are talking about, and it involves the broader context of where global finance is heading and why XRP is positioned at an increasingly central point in that trajectory. The ISO 2022 migration that SWIFT completed at the end of 2025, the global shift to a new financial messaging standard used by central banks, payment systems, and settlement infrastructure around the world, created a new baseline for what financial infrastructure needs to be able to do. XRP is fully ISO 2022 compliant. It speaks the language of modern institutional finance natively. That compliance matters because it removes one of the last technical objections that regulated institutions could raise when evaluating XRP Ledger for deployment. The network does not just move fast and cost less, it communicates in the standard that global banking now requires. On top of that, SWIFT's own live digital asset trials, which have been running through 2025 and into 2026, have specifically included testing of how XRP can serve as a bridge in cross-border flows between different central bank digital currency networks. The organization that processes the backbone of global interbank messaging is not running those tests as an academic exercise. It is running them because it recognizes that the future of cross-border settlement is going to involve digital assets, and it wants to understand how the most capable ones actually perform in live conditions. Meanwhile, Ripple has been assembling what analysts are now describing as a banking-grade technology stack through approximately $4 billion in acquisitions during 2025. The acquisition of Hidden Road, rebranded as Ripple Prime, brought prime brokerage capabilities that clear around $3 trillion per year. The acquisition of Rail added stablecoin payment rails. The acquisition of Treasury opened the corporate treasury channel. The addition of Palisade contributed institutional custody and wallet infrastructure. Put that stack together with the OCC Trust Charter, and you have a company that is no longer a peripheral payments innovator operating at the edges of the traditional financial system. You have a company that is being woven into the fabric of that system at the infrastructure level. For the XRP holders who have been carrying this investment through years of uncertainty and frustration, and there are many of you watching this right now, I want to say something that I think is worth hearing directly. The thesis that serious XRP holders have always carried was never really about a short-term price target. It was about something more durable and more fundamental than that. It was about the belief that this technology solves a real problem that the global financial system genuinely needs: faster, cheaper, more transparent cross-border settlement, and that Ripple had built something that could deliver that at scale. And the patience that thesis required, the patience to hold through the SEC lawsuit, through the exchange delistings, through the years of suppressed price action and relentless negative narrative, that patience was not irrational. It was grounded in a genuine understanding of what was being built. What February 2026 is showing us is that understanding was correct, not perfectly timed. Markets are never that cooperative, but fundamentally, directionally, structurally correct. The institutions that are now deploying on XRP Ledger, the regulators that are now granting Ripple direct access to US banking rails, the global financial organizations that are now running live trials with XRP in their payment infrastructure, they are all arriving at the same conclusion that serious XRP holders arrived at years ago. The technology works, the use case is real, the institutional fit is genuine, and the moment the regulatory and infrastructure environment aligns with that reality, the dynamics of this asset change. That moment is not some distant hypothetical. It is unfolding right now in real time in the form of a European banking giant deploying its stable coin on XRP Ledger, a German banking institution integrating Ripple's technology, a US regulator granting Ripple direct access to banking rails, and a global asset manager partnering with Ripple to bring traditional funds on-chain. This is what winning looks like in institutional finance. It does not look like a price spike. It looks like this quiet, methodical, irreversible infrastructure adoption by the institutions that actually run the global financial system. For the newer viewers trying to figure out how to process all of this, here is the framework I would leave you with. Think about XRP not as a speculative token that needs a catalyst to pump, but as an infrastructure play whose value is tied to the depth and breadth of adoption at the institutional level. The question that matters is not what the price will be next week. The question that matters is whether the XRP Ledger continues to attract serious institutional deployments, whether the adoption of ISO 2022 compliance standards continues to expand the universe of institutions that can technically integrate with this network, and whether Ripple's growing banking-grade technology stack continues to deepen its position within the infrastructure of global finance. The evidence available right now points strongly in the direction of yes on all three of those questions. That evidence is not a guarantee of any specific outcome. It never is in markets, but it is the kind of foundational evidence that serious long-term investors pay attention to. Not the kind that Twitter influencers generate with price predictions, but the kind that comes from watching where the institutions that manage trillions of dollars are actually deploying their infrastructure and their credibility. Do your own research. Verify everything I have shared here from primary sources. Form your own view with your own reasoning. That is always the right approach. That is going to wrap it up for today. If this video gave you a clearer, more grounded picture of what is actually happening in the XRP ecosystem right now, the banks, the charters, the stablecoin deployments, the institutional integrations, then it did exactly what it was supposed to do. Drop your thoughts and questions in the comments below. I read every single one of them, and I genuinely want to hear what you think about where all of this is heading. If you are not subscribed yet, please consider hitting that subscribe button and tapping the notification bell. This story is moving fast right now, and you do not want to be the last one to know when the next major development drops. This is John OG. Stay informed, stay patient, stay rational, and take care of yourselves out there. I will see you in the next one.